Hey, thanks for stopping by. I'm Digital Micro, and you're on the Digital Micro Trading Journal channel. We do day trading for ROI payout, no trade recommendations, just a trade journal. And this is about weekend trade prep, chart analysis for new trading week. This video journal will take a closer look at some of the charts that are making the biggest impact on my trade plan and market thesis. Let's get to it. Weekly chart on the M2K. What is notable is a rare event, price piercing upper Bollinger Band. And at the same time, we have a weekly sell order flow signal because we've got a demand imbalance. So that's to note. That 161 is the delta. So when's the last time this has happened where price pierces upper? We got to go back to August. So check out this candle. We pierce it. The next week, look at what happens. So I'm not saying this is an exact replay, but when you look at the 3 EMA, the 9 EMA gold, and the middle Bollinger Band, and you look at the angles and the trajectory of when this happened, and you go back into last August, you look at the trajectory again of the same areas, it's eerie how well that it almost lines up and matches. And the distance between the last time that it happened and now is roughly 6 months. So almost 180 degrees from the last time. So that polarity, that length of time shows that this is a major event that I'm going to note for the rest of the month, at least till the next FOMC meeting in March. Let's go to the next chart. This is an order flow chart year to date, and I've got the red arrow on the right pointing how the pace, the speed, the velocity was the largest the day after FOMC Thursday. So that's a big significant thing. So again, the strength of the hits, not so much, but this latest rally, it really had the largest pace. So that's a potential that this was a peak moment in this rally, and I'm just taking note of it before I point out the price action on the 24 hours. So once again, M2K price action order flow pointing out the pace. Next chart. Okay, 24-hour price action chart on the candles. 23 sessions year to date, 34% or eight days we've tagged the upper Bollinger Bands. The probability is the next 23 trade sessions are not going to have 34% hitting the upper Bollinger bet. So I'll take that trade. So that's part of the market thesis that I've got until the next FOMC meeting. As far as the double top goes, this is the wicks hitting this top here. Thursday, such an important day after a candle here. Friday, we couldn't quite match it, but very close to a double top. And the only other thing I'll mention is this order flow. It is a buy. We'll see if it holds on Monday, RTH. And I mentioned the market profile structures here in the previous video. I won't go over that. I'm going to cover that in the market profile chart. And then below here on the order flow, I'm just pointing out what I did in the previous chart on this pace. Largest one of the year. Next chart. The 120, we finally hit this middle Bollinger Band zone, but it was done on a flag. So I'm not too keen that Monday is anything down based on this 120. What I do see is it's probably going to pinch upper Bollinger Band, lower Bollinger Band. We're probably going to compress this overnight pivot. That's my first line in the sand and see in Globex if we can hold above it or are we going to hold below it. And then Friday's RTH open. So these are the two zones that I'm going to watch along with the Bollinger Band. It's probably going to be hands off for me unless Europe decides to make a run for the upper Bollinger Band. Down here with this green moving average, that's the 81 EMA. It's steadily climbing. The Bollinger Bands are giving a warning sign because they are going to be compressing. It looks to be in Globex Monday. Next chart. This is the Renko from the day after FOMC announcement, and it haunts me still this weekend because I'm looking at this second Keltner pierce of price. This is right after Thursday's initial balance close, and look at this just massive price hit. So the red arrow is pointing this out. So we go back to the red line, we balance, accept, go back above. The price is only on the first Keltner, then we have sell distribution, then it comes back on the RTH close. What I take away from this chart here for the new week is just, again, we talked about already the pace on the 24-hour. It all happened with this velocity, and this is what I'm going to be looking for. Either we have it next week or we don't. I'm going to remember this chart for a long time this year. All right, let's go to the next one. We want to look at structure. Here is the structure, market profile. See in color here, this rectangle is showing the level that bulls need to conquer to keep the rally alive. And that's a tall order because look what it took to build this. Where we ended the week and how the day after FOMC was accepted. And we have a lot of volume here. We have price really for a while staying there. The only reason I think we went down below the zone was just Friday and the weekend, but it was very impressive. So again, this is the overnight pivot, the 2006 zone, the RTH open from Friday, which comes out 86 and change. Below it is this trap traders single P. This is the FOMC day, M period. M is in Mary, single prints, trap trader level. Below it, FOMC O period as an open. So that's single print. And then we have the initial balance high. So these are the two levels. I'm not sure we're going to hit this Monday or Tuesday or even maybe next week because we still got to figure out when are the longs, when is wholesale going to get tired and have a long liquidation. So at this point, there's no overt sign, but I am just pointing out the levels on the market structure and the toothpicks that it's built on these single prints. That's all I've got. If this has helped you in any way, throw me a like. If you haven't subscribed, I really appreciate it if you can do that if it's helped. Take care. Aloha.